warm welcome to everyone. Thank you for joining us this morning at what is arguably perhaps a seminal gathering of retail faces and retail minds here in the GCC. We're very, very glad to have you here, and we thank you very much for taking your time and input in to join us today. What we hope to do over the next couple of days, and as you can see in terms of the way we've decided to structure this conference as well, is that it's less a conference and more about a meeting of minds. It's ideas being shared, collaborative strategies being discussed, and indeed ways forward. For many people, 2020 seems to be the target, whether it's for the retail space or economies in general, and that's exactly what we're going to talk about today. Retail itself is facing challenges, to put it mildly. Things have changed and changed with speed in the last couple of years. Online stores have taken off in a great way. For a couple of years now, I've been watching the offline-online debate, and it's interesting that we seem to have passed that cusp, and now discussions seem to be about omni-channeling. It seems to be more about a collaborative approach, both for online and offline, and indeed, the reality that for retail, there is no online versus offline. There has to be a presence, and a strong presence, in both areas. So that's what we will be talking about. Technology, social media, indeed economic trends as well. I was just reading a report this morning that indicated things may be stabilizing a bit for oil because of the talk in terms of cutting output, but these are all still straws that are blowing in the wind. The global economy itself is in a bit of a flux. All eyes are on the US election outcome and what the ramifications might be for economies worldwide. So there's plenty that goes into the melting pot over there as we discuss what happens for retail. Just a quick note as well that everything we discuss can be tweeted out or put out on social media at 2016 MRF. That's our official hashtag, so feel free to share your thoughts with the online world. Later this evening, we will also be celebrating what is arguably the faces in retail that have come a long way and have made a mark for themselves. So do join us for the Images Retail Awards, but that's later in the evening. For now, it's all talk, and it is talking about how things are progressing in the retail industry. So let's start off with a couple of keynote addresses. What we're trying to do over here is really set the stage in terms of what the key issues of point might be in the years going ahead, and more importantly, what the solutions to that might present themselves as. Luxury retail is something that the Middle East has really been synonymous with, really, but things have been trending off, whether it's because of the volatility in currencies or what's been happening generally with oil prices, or perhaps even a changing mindset in terms of how consumers now go out and consume. But luxury retail, I think, is one pinpoint focus that the GCC has been looking at very carefully. In order to talk more about that, may I, without further ado, invite on stage Mr. Cyrille Fabre. He's partner at Bain and Company, and he will be sharing his thoughts on the changing face of luxury in the Middle East. Cyrille.
Good morning, everyone. Really my pleasure to be here to share some of my thoughts about the outlook for the GCC retail market. I focus a bit more on the luxury segment, but I think a lot of what I'm going to describe is probably applicable to many other categories. So before I sort of start discussing where we are now and the future, let me sort of rewind back and see where we came from, because I think it's important because it has shaped our understanding of the world in a certain way. My point, we come from a decade of really hypergrowth from 2004 to 2014. The retail segment, the retail market has really been booming. Here we can see one of the strong data that exists, which is the amount of cash that people withdraw from ATMs in the UAE. And we can see that from 2010 to 2014, it's been growing 16% per annum. And that's a good sign that, broadly speaking, the retail sector overall, year after year in the UAE, has been growing about 15% per annum over a decade from 2004 to 2014. Now that's very high double-digit growth, and that was driven by partly by population, but more fundamentally by the mall, which was growing at 6% per annum, the spending power, the GDP growing also very fast, the number of high net worth individuals coming from various parts of the world where there were issues and they felt they were better off coming into the UAE, the tourists, the number of brands coming into the market. What I mean is a decade of hypergrowth. And if we take luxury, as we zoom into luxury, clearly luxury, if you say in 2004, was only in the GCC, the whole Middle East, was about $3 billion. 2014, a decade later, it was $9 billion. So we triple in size, right? With a CAGR which was around 12-15%. So fantastic golden years. And all of our retail executives have been all trained. Their capabilities have been shaped. Their understanding of how to manage retail have been shaped in a decade of hypergrowth. As a result of that, the Middle East, this is looking at the luxury market in all the countries in the world, and this is the top 10 countries. And you see that if Middle East was a country, which obviously is a little bit of an abstraction, it's many countries, but if the GCC, let's say, was a country, it would be among the top 10 markets for luxury goods around the world. Obviously not as large as the US, not as large as France, and so on, but already becoming very significant as half of France, for instance. And Dubai, as a city with luxury goods sales of about 2.3 billion euros, will be also ranking in the top 15 cities in the world for luxury goods. So clearly this decade of hypergrowth has put Middle East on the map of all the global brands. Clearly the market here for the luxury, again, I'm zooming a bit of luxury, is a bit different from what it is in the rest of the world. UAE is a huge part of this market. Fashion is large, but beauty is relatively larger. So if I compare that with the rest of the world, I would say beauty is relatively larger, and this is only looking at Western beauty. More leather goods and shoes, fewer ready-to-wear, more absolute luxury brand. Here we like absolute luxury, so the top brands that come to your mind in terms of luxury, they have a share which is relatively higher here than they are in other markets. More brand-driven, we like visible brand, we like logos, we like brands that are easily recognizable, and relatively lower e-commerce penetration. Now, this was all good from 2004 to 2014, decade of hypergrowth, fantastic, but then all these things happen, we know them very well. The dollar, super dollars, the devaluation of the Russian currency, the Chinese currency, the stock market crashing, the oil crisis, all this changed fundamentally the market. And from a decade of hypergrowth, where we used to see this 16% CAGR every year, suddenly the market not only slowed down, but actually declined. So this is looking at, again, the amount of money that people withdraw from ATM. And the reason why I'm using this data, it's because it's one of the few data we can be sure of, because this is monitored by the central bank, and this is an official data, and also it's released every quarter, so we can have a good sense. So as you saw, historically since 2008, obviously in 2009 we had a big slowdown with the crisis that happened, Lehman Brothers and so on. But except for that, this was phenomenal year, double-digit growth year on year on the amount of money that people are withdrawing from ATM. And then in 2015, Q1 started very good. You may remember the king of Saudi Arabia gave double bonus on that particular month. And then suddenly we moved from 20% to 7%, then to 4%, then to 4% again, then to -5%. And for the first time in 15 years that this data is tracked by the central bank, the amount of money that people withdraw from ATM not only slowed down, but actually declined by 5%. And Q2 is marginally up at about 1 or 2%. So what I mean is that for the first time in Saudi Arabia, the retail market shrunk. Not only slowed down, but shrunk. To give you some ideas, the car retail in Saudi Arabia is down 20 to 30%. The grocery retail in Saudi Arabia is down probably 5%. So it depends by category, but almost every category is not only slowing down, is actually negative. And the non-oil GDP, the retail part of the non-oil GDP, which is also reported by the Central Bank of Saudi Arabia, is also down for the first time. So what I mean is we move from a decade of hypergrowth, remember this 15, 16% growth every year, which has really shaped the understanding of all our executives in the retail industry. Suddenly, we are not only in a slowdown, but we are actually in a decline, in a recession. So the market, as for 2015, was stable. I think 2016, we will see for the first time a decline. But in 2015, it was stable. All categories were affected, especially apparel. All countries are affected, especially the UAE. And in fact, it really started in the UAE and gradually sort of expanded into other countries of the region. So what's the big deal if the market is stable? Is not so bad. Well, the big deal is at the same time that the market was stable, the number of square meters were increasing because, we continue opening stores at a fast pace. As a result, the like-for-like sales, which used to be growing nicely above inflation before, suddenly went into negative territory. And in 2015, this is again in luxury, many times like-for-likes were between -2 to -5%. But obviously in 2016, it's much worse. And in 2016, if I look into the fashion categories, there are many, many retailers that are just not turning a profit, that are losing money. So this is a huge change. We move from a decade, 2004, 2014, hyper-growth, strong like-for-like, strong profit margin, into not only a slowdown of the growth, but now a recession, and for many retailers, negative like-for-like, and for some retailers, few retailers, actually negative profit margin. I think it would be easy to say, well, it's a micro cycle. The oil price is low and it will come back up, so it's just a matter that we have to wait. I think no. I think yes, definitely this micro cycle will come and go. And, we have seen low oil price in the region and we survived it and it will come back at some point. We don't know when, but it will come back. But despite the oil price and the macroeconomic cycle, I think something has really changed in the market. What I mean is I think the market is maturing. After, if 2004, there was close to nothing in the region, very few malls, very few regional malls, very few hypermarket, very few brands were present. Now, a decade later, we have so many super regional malls, so many hypermarkets, so many brands present. What I mean is these investments over the last 15 years have made the market more mature. And I think now, even if the economy and the oil price come back, we should not expect the market to come back in the same way as it has been growing in the last 10 years, because the market is more mature. So in my opinion, consumers are more mature. They are now super aware via internet and everything of everything going on internationally about the price in different places of the world. They are more demanding, and they are not going to come back to be less assertive. I think they are becoming very assertive, very sophisticated, and this will only increase. And if I think about a supermarket, let's say in Saudi Arabia, we have maybe 20,000 SKUs. A supermarket in France, we probably have 50,000 SKUs. And I think, this is a direction that in the region we will move toward that greater sophistication. The tourist profile, more mass, I think this is a trend to continue. And if I look into the hotel being built, I also see more 4 stars and less 5 stars in the mix. Supply saturation, when we look into the square meter of mall per capita in many cities of the region, there is huge development going on. But if we think about 2015, 2018, 2019, we will be close to saturation point in every cities of the region. So I think the rhythm of opening of new malls and new super regional mall is still very high, but I think we should think that by 2019, 2020, the rhythm of opening will be much lower, and we will be, because the market will be close to saturated. The margin pressure is here to be worse. The cost of doing business is increasing everywhere. In Saudi Arabia, Saudization, of course. Also taxes, in Saudi Arabia in particular, municipality taxes have been announced. Potentially income tax will be announced also. So cost of doing business is definitely increasing. VAT is coming. At the same time, the consumers are not going to get richer. the disposable income of consumers are actually shrinking or being stable, shrinking in some countries. You've seen some austerity measures again in Saudi Arabia recently, but otherwise, let's say disposable income at best is flat. But inflation and the cost is going up. So if we can't increase our price and if costs are going up, obviously our margin are squeezed. Brand control and distribution, I think more brands are coming directly. In luxury, it's largely done already. But in other categories, so the brand that used to have distributors, increasingly they make joint ventures with their distributors or they go much more directly than before. And financing, clearly there is a bit of scarcity of liquidity now and the cost of capital is going up. So, it's pretty bleak because when the margin is going down, the growth is no longer there, and at the same time your cost of capital is going up, and because you open a lot of stores in the past, you have a significant debt on your balance sheet. That all creates huge challenges. So last slide. I really think we are moving from a new reality, a new market norm, from hypergrowth, which was the last 10 years, to a single-digit sustainable market growth. I still think this market is a good market in the long run, but it's not a 15% per annum growth. It's more like a 3 to 5 to 6% growth per annum, which is by international standard a good market. More passive consumers historically to very knowledgeable and demanding consumers. Expansion and new brands as the top drivers of growth. All we had really to be focused on was to be able to open store at a crazy rhythm and to do that very, very well. But now, as a rhythm of opening slow down, really what's going to be more critical is our ability to stimulate like-for-like growth, is our ability to win in a more saturated and a more competitive market. And I think those are different capabilities that we will need from our staff. Retail capabilities focus on expansion and top-line management, rising importance of customer experience, cost management, cash management capabilities. Franchise model with active joint ventures, increasing penetration of the brand directly. Market focus on Western concept and traditional formats to emergence of local concepts. I mean, obviously, Chalhoub led the way with, Shoe Level District being so successful in Saudi Arabia. I think later in the day in this forum, we'll have also in food service example of Dim Al Bassam, who came with formidably successful, probably the most successful food service concept in the region, and they are invented from here. So I think this theme of local concept is growing momentum, and generally the market is more segmented. As we try to stimulate like-for-like growth, we cannot try to do one size fit all, and it's about targeting certain segment of customers and overperforming for them. Regional market focus on Dubai, especially in luxury, to emergence of super regional malls throughout the region. Just in Riyadh, there are 2-3 malls now being open, as you know, which are all about the size of Mall of the Emirates. So really this concept of super regional mall, obviously already in Kuwait, now in Saudi Arabia, in Qatar, in Abu Dhabi. So this is becoming much less Dubai-centric and much more multipolar in the region. And last but not least, a lot of the growth historically has been organic. I think some companies will struggle in this new environment, and as a result, they will create M&A opportunities. And I already see in sort of due diligence that we do that we have more and more merger and acquisition coming up, and potentially this will be a good thing for many retailers in the region. So that's the thoughts I wanted to share, and look forward to discussing with you during the forum. Thank you.